It's all about tomorrow, I guess?
It is. At this point, it's about CPI, and I think we've priced in, for sure, a much better reading. Now, I think for the market to kind of extend gains, you're going to need to see something below 8%. Estimates are calling for somewhere around 8.1. Let's see something below 8 to get really excited, and let's see what the core measures as well, too. The core excluding food and energy, that's going to be important.
If this move, Farmer Jim, is all riding on tomorrow, I know you're going to be sweating bullets. You're going to be sweating bullets when that number comes out because you need it to be good for your thesis to work.
Yeah, you're absolutely right, and Joe's right as well. I mean, another way to phrase this is if it's bad, if it's above expectations, Houston, we got a problem. However, having said that, I am looking at gasoline futures. I've been talking to you about that for a long time. Freight costs, inventory to sales ratios. There's a lot of reasons to think that it might come in light. Now, I also want to acknowledge that rent is a problem, and the Fed wants to see some signs of cracking in the labor market, which it just hasn't. So what you come down to is, yes, it's just one data point, and the Fed wants more than one data point. But it's a pretty important data point to get right. And if it goes wrong, Houston, we've got a problem.
Unless you figure, Weiss, that even a good report doesn't necessarily change all that much in the big picture. Yes, okay, we hope it's coming down, but it's still way elevated above where the Fed needs it to be. The Fed's going to keep interest rates higher for longer as a result of that. So what in the big picture does it really change?
In the big picture, at the end of the road, it changes absolutely nothing. In terms of what it does on a short-term trading basis, well, I think the market will have a pretty powerful rally if the number is a weak number, meaning showing inflation coming down. Because the market has just shown this incredible appetite for taking on risk, despite what the Fed governors have said. So when you actually have some evidence that, and it's not necessarily prolonged evidence, it's just that this one data report is working in the bull's favor, you'll see the market take off. Plus, you also have an absence of news. So companies aren't going to come out and lower numbers this early in the quarter. So I think the market will take off nicely. On the other hand, given what's happened over the last week, if it's a strong number, bad inflation number, you'll see the market give up the 10% and put on. So it really is a binary event tomorrow.
Yeah. No, that sounds right. Amy, is that how you see it, too? If you're coming off, we are coming off a good week in which Mark Newton of Fundstrat, who we cite quite often, points out the breadth was far more broad-based than many may realize. He thinks the rally likely gets to 41.25 to 41.50 at a minimum, he says. Can't rule out an even larger push higher if CPI shows weakening headline inflation on falling gas prices. You do have Tom Lee, and he's been putting out expectations, too, that inflation is going to drop like a rock, and it already is.
Right. Well, I mean, I think Steve's exactly right. It's a binary event tomorrow. The market will move on it. I also think it's ridiculous in some ways that we're spending so much time focused on a number that's a lagging indicator to determine what the Fed policy is going to do, which works with the 12 to 18-month lag. So I do think there's a lot of mismanagement here in terms of what's going on and what the market's looking at, or misanalysis, wrong analysis, I guess I would say. But it is what it is, and the market's going to move on this number. 41.25 is, I think, 30 points from here. It's nothing. I think, yes, the market could easily get there, sure. But I really think we have to focus on what the Fed funds rate is, but we also have to focus on what the neutral rate is. And I think what we're learning is that the neutral rate is higher than anyone thought it was, or consensus was, which means that the Fed raising rates isn't as impactful as we thought it was 6 months ago.